Did you know that during the 2008 financial crisis, silver outperformed gold by more than 30% in percentage gains? While gold often steals the spotlight, history shows that silver can be an even more powerful asset during times of economic turmoil. In today's video, we'll dive into 10 key reasons why silver may surpass gold in the upcoming financial crisis. Welcome back to the channel. Today, we're discussing two of the most talked about assets during times of economic uncertainty, silver and gold. Both precious metals are seen as safe havens, but in the midst of an impending financial crisis, many experts are turning their focus toward silver. While gold has historically been the go-to hedge, silver offers unique advantages that could make it the better investment in the near future. By the end of this video, you'll understand why silver might just surpass gold as the metal of choice when things get tough. So let's jump into it. First, let's talk about the signs pointing toward a potential financial crisis. Inflation is rising, global debt levels are reaching record highs, and geopolitical tensions are disrupting markets. These economic indicators suggest that a financial crisis could be looming on the horizon. During times like these, investors flock to safe haven assets to preserve their wealth. The big question is, which metal, silver or gold, will perform better during the next economic downturn? While gold has traditionally been the go-to asset for preserving wealth, there's growing evidence that silver might outperform gold during the next financial crisis. But why? Let's explore the key reasons. 1. Market size and volatility. One of the first reasons silver could outperform gold is its market size and volatility. The silver market is much smaller than the gold market, which means price movements can be more dramatic. When demand for silver spikes during economic uncertainty, the smaller market can lead to more significant price increases. For investors looking for bigger gains, this volatility can work in their favor. 2. Industrial demand. Unlike gold, silver has a wide range of industrial uses. It's essential in electronics, solar panels, and medical devices. As industries continue to grow, especially in areas like renewable energy, the demand for silver is expected to rise regardless of economic conditions. This gives silver a dual-purpose role, both as a precious metal and an industrial commodity. In a financial crisis, industrial demand may help support silver's price, even as investors turn to it as a safe haven asset. 3. Supply constraints. Silver is often mined as a byproduct of other metals like copper and zinc, which means its supply is more constrained than gold. If a financial crisis leads to reduced industrial activity, the mining of base metals could slow down, further limiting silver supply. This combination of high demand and low supply could lead to a surge in silver prices, making it an attractive investment. Chapter 4. Gold to silver ratio. Historically, the gold to silver ratio has been a key indicator for investors. This ratio compares the price of gold to silver and shows how many ounces of silver it takes to buy 1 ounce of gold. The average gold to silver ratio over the past century is around 50-1, but in recent years, it has hovered closer to 80-1. This suggests that silver is undervalued relative to gold. When the market corrects, silver could experience a more significant price rally, helping it close the gap with gold. 5. Affordability. Silver is much more affordable than gold, which makes it more accessible to a broader range of investors. During a financial crisis, people may be looking for ways to protect their wealth, but may not have the resources to buy gold. Silver offers a more budget-friendly option, which could lead to increased demand as investors flock to it as a safe haven. As more people buy silver, its price could rise rapidly. 6. Currency devaluation. In times of economic uncertainty, currency devaluation becomes a major concern. While both gold and silver are seen as hedges against inflation and currency depreciation, silver's lower price point allows for greater upside potential during periods of currency weakness. As central banks print more money to manage the crisis, both metals will likely rise. but silver's lower base price could lead to a more significant percentage increase. 7. Central bank activity. While central banks around the world hold large reserves of gold, they hold much less silver. This means that silver is less affected by central bank activity. When governments start buying or selling gold, it can cause significant fluctuations in the gold market. Silver, on the other hand, is more driven by private sector demand, which could make it a more stable asset during a crisis when central banks are actively managing their gold reserves. Chapter 8. Diversification benefits. Silver offers significant diversification benefits within a portfolio. It doesn't always move in tandem with gold, and it can act as a counterbalance to more traditional financial assets like stocks and bonds. During a financial crisis, when many assets are losing value, silver can provide much-needed diversification and protect against significant losses. 9. Physical versus paper silver. Another reason silver could outperform gold is the growing demand for physical silver. Many investors prefer to hold physical silver as coins or bars rather than relying on silver ETFs or certificates. The increased demand for physical silver could create supply bottlenecks, pushing prices higher. This isn't as much of a concern with gold, which has a more established market for physical ownership. 10. Historical precedent. Finally, let's look at historical precedent. During past financial crises, silver has shown the potential to outperform gold. In the 1970s, for example, silver's price increased by over 700%, far outpacing gold's gains during the same period. While history doesn't always repeat itself, these past examples suggest that silver could once again deliver strong returns during times of economic uncertainty. Now that we've examined the key reasons silver could surpass gold in the next financial crisis, let's highlight one particularly compelling insight. Expert analysis from industry leaders suggests that silver's undervaluation relative to gold presents a significant buying opportunity. Many analysts are pointing to the gold-to-silver ratio as evidence that silver is due for a major correction. If this happens, we could see silver prices explode, providing investors with extraordinary returns. So let's recap the 10 key reasons why silver could surpass gold during the next financial crisis. Silver's smaller market size and volatility make it prime for larger price swings. Its industrial demand adds another layer of support for its value, while supply constraints could limit availability just as demand is surging. The gold-to-silver ratio suggests that silver is currently undervalued, and its affordability makes it accessible to a broader audience. In times of currency devaluation, silver's upside potential increases, and with less central bank activity affecting its price, it remains more stable. Add in its diversification benefits, rising demand for physical silver, and a history of outperformance during past crises, and it's clear why silver may outperform gold in the near future. What do you think? Do you agree that silver will outperform gold in the next financial crisis, or are you still a gold believer? Drop a comment below and let me know your thoughts. If you found this video helpful, make sure to like and subscribe for more insights on smart investment strategies during times of economic uncertainty. Thanks for watching, and I'll see you in the next video.